What's happening, guys? We are on to the last Sunday video of November. We're already into December by the end of the week, and I'll be in San Diego. We're doing the Traders for a Cause joint kind of beach cleanup over there, and then doing some fun stuff afterwards. So if you guys did sign up, I will see you out there. I hope that a bunch of you will be able to make it who are local. And hey, you know what? Even if you're not local, you could still go. But we fired off the link to sign up and get out there. And like I said, it should be a fun time. First off, welcome to all the new members over the last week. We did the Black Friday sale, which, as most of you saw, it is the best deal that we do of the year. It's really the only sale that we did last year. We did one small sale, like I had said, but really there wasn't, any of the bonuses or anything that was as crazy as Friday's deal. So hopefully you guys clicked through and actually saw what we were giving away with everything, because like I said, we try to make it a 100% no-brainer. For those of you guys that did not participate and you're still on the fence and maybe it was too much for you to commit for an annual, you're not ready yet, you kind of want to see a little bit first, Cyber Monday sales will start tonight into tomorrow morning, and those are going to be focused on the the quarterly and smaller type of subscriptions, so that once again, if you do click through and you see what else we have thrown in, we've made it a no-brainer. So again, this is our only real sale of the year, and as you guys know, I do literally every single Sunday scan. It's not a pitch. This is the only 2 weeks that I'm going to pitch you for joining the room. So hopefully you guys will make it past this and get into a Sunday video for today, because we've got a lot of good stuff to talk about. And the last couple things that I wanted to mention before doing that is study session this week with Sam. We do that every Wednesday. So Sam takes the mic every Wednesday at 4:15 p.m. Eastern Time, also known as Turbo, in the room. And we've done an interview with him on the Investors Underground channel. So if you want to kind of get a little bit of his backstory, check him out. But he's always been a really big asset in the lounge, helping out new members. So I saw that. We kind of speak the same language, and he understands all the concepts and sort of setups, and has the patience to go through those questions and field all the questions that people might have. But the biggest part is more getting people out of their comfort zone. He's put people on the mic, new traders that you've probably never heard of, trying to get people to learn from all these different styles of traders. And as you guys know, you should be taking a little bit from everybody, right? You're not going to be the same as someone else. You're never going to be a carbon copy. If you're always trying to follow the leader, you're never going to get to your own potential. So the best way, and what I've always done, learn from other people. You never stop learning, but you take a little bit, and really mold yourself into the best style of trader for you. And so anyway, let's get right into it. T-shirt winners for this week: Stephen Shirley, Doug Loopshaw, and Eric Santos. Last 2 weeks have been awesome. It's not always the case. We had a very powerful first 6 or 8 months of the year, or whatever it was. And then it kind of started to get a little bit, not necessarily slow, but I was slow to adapt, and, really underperformed based on, some of the action that was out there, and probably required a lot of swing trades, which, maybe I wasn't comfortable with. It's tough to maybe chase gap ups that go up all day and then gap downs that unwind all day. But for the most part, the last 2 weeks have been, right back, in my wheelhouse anyway. And, that's really what it's about. You just got to wait for things to come back into your wheelhouse. And one of the conversations that I had last week was with a member, and he's 18 years old. And he had showed me his, P&L curve, and did everything that, kind of shared where his journey started, and kind of how he got there, and mostly a long-sided trader. But he had pulled back $22,000. 22 out of the 400. And he was asking me, can edge go away? Is it possible that, what you had before as an edge is just gone, that's it, gone for good? And, I was, first off, I was super impressed, just like I am with some of these other guys, Connor and Jack, the, 22 to 24-year-olds that are just insane, mature for their age. But the fact that he was asking that and it had only pulled back, 20, 22 grand off of his 400 that he made was really impressive. And, the conversation that I had, I think it's very good for many of you because, you are going to hit that wall. And there's going to be cycles when you really perform, when you really outperform. The outperformance comes when you can maybe push a little bit more size than you normally would. Maybe you're on a big run. Maybe the market is rewarding that extra, flex, if you will, on size. But knowing when to pull back and knowing when to, kind of take your foot off the pedal is probably the hardest part because people get used to, coming in, day out, bam, 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 just absolutely crushing it. And then you try to maintain that. And when you have subpar setups, and you try to maintain what you were doing, it goes away just as quick. So I reminded him that, 20, 22K pullback off 400 is nothing really to even sweat about. But just understand that there are going to be those periods. And no, the edge doesn't fully go away. It just may not be outperforming in this current market. It may be we need to take a step back, maybe start to learn new different styles of trade. And, one of my suggestions to him is possibly 100, 200 shares of trying new things, right? Everybody always says paper trades are, no emotion and therefore, you don't really learn. Although I beg to differ to an extent. But if you want to get your feet wet, trade a couple hundred shares and get in there and try out different things. And don't go for trying to crush it. Don't try to make a ton of money. But go through the motions and are you making good trades? Does it make sense? And, are you buying low, selling higher, shorting higher, covering lower? And then you start to scale up as you start to see where you perform well at. So I think that's really one of the biggest things that most people don't have the chance to explore because they're just chasing what they were doing before. And they're compounding losses down, and then it's just too late because you owed taxes from last year, you blew up your account a good extent, and then that's it. You're left with not too much, and it's a complete mind, for lack of I'm not going to swear on Sunday Scan. I would never do that, but it's going to throw you for a loop, right? And you need to be super cautious with. When you've made it so far and then you just throw it away. And a lot of people do that because they don't just take that one step back. So keep that in mind. And one of the things for me is, when I get prepared and I've said it multiple times when the market is up or down 500 points, there's no real point to just, kind of have a plan right now and then go after it in the morning because we don't know are we going to gap up 500 or down 500 and all of the things that are on watch are going to be all kind of thrown off because it's whatever the market's doing that morning. So when I trade confidently off the open, it's because it's a setup I'm familiar with, I'm prepared, it's doing what I expected, it has good volume, good liquidity, and I am confident that that trade will work. In the event that it doesn't, my risk is in check anyway. But in the event that it does, that's the one that I want to scale into because I'm prepared for it. And I know that when it does, in the case of, say, a gap up parabolic on an overextended chart, I know that when it does crack, it's not just going to be one crack. It's going to be multiple big unwinds. And that's what, to me, makes it my A+ setup. Because I know that most of the time, whether it's 8 or 9 times out of 10, that trade's going to work. And the few times that it may not work, as long as my risk is in check, over the course of 10 and 20 and 30 and 40 different, times, it's going to work really, really well. So think about that. The cheat off the open is, are you confident about a trade? And if not, then it's always hands off for me. 9:45, 10 a.m. plus, get a feel for the market. If I take a trade early in the morning and it's not an A plus, before 9:45, 10 a.m., I'm taking gains. I'm moving on if it's not working. I'm not fighting stuff past 10 a.m. I'm not scaling into losers. I could go on a ride on the first entry because it's just starting in. It's just getting a feel for it. Most people say they're starting in, and it's actually really their position. So whatever you do, if you are attempting to scale, make sure that you actually are scaling and it's not just your one entry kind of position and you're just calling it a scale. The last thing too, middays. I know a lot of people do well off the open and then start to get back. That's exactly why I started Investors Live way back in the day. And, it was just to kind of, instead of pushing buttons, I'd start to blog and do like different scans and things like that. One quick question to ask yourself: are you risking, for example, 1,000 to make 1,000? And if you are, then why? Why even take the trade? So right away, it should be in a risk to reward that kind of makes sense, right? You should be risking maybe 1 to make 3, like we always talk about, 3 or 4 or 5 as you start to scale into that trade. But if it's 1-to-1, why bother? Just wait for either the setup to show that, hey, this is a good opportunity to risk 1 to make 3, or wait for the next day. And again, like I said, use this time to dabble into new concepts. Get out there and try different things that maybe you are unfamiliar with. You've seen some do successful trades with. You're curious. But don't dive into it because, you never know. And you want to just kind of slowly leg into that particular trade. And then one of the other questions that he had was, it's just him, right? Just him, small circle, no real trading friends. And, how do you meet other people? That's what the Traders Lounge is for. Traders Lounge, every single day, put yourself out there. And the more you put yourself out there, more people will kind of gravitate towards you. And that's how you meet your, what will become your trading circle online. Everybody does that on Twitter and different social networks. And it's important to do that as you start to grow. And then at some point you can go ahead and shrink it back. Once you find your circle, then you don't really need the noise of social media. Because as you know, if you start to find success, you're just going to get trolled because, there's no way you could be a profitable trader. So, point being is put yourself out there, find that community, and that's what the Traders Lounge is for. And when Sam does the 4:15 every Wednesday webinars, that's what that's for. Put yourself out there, ask questions, go on camera, share your story, and you're going to relate to other traders more than you know. And that's what's going to help you succeed in the long run. Now, we'll get right into the questions that were sent in. Don't want to make this a super, super long video. I've been getting back up over the 40-minute mark, so I'm going to try to keep it low. But still struggling on how to choose the one to trade among gappers and the one that has the range potential, float, news, fundamentals, volatility indicator, history, all of them. Those were all questions that he had as to relative volume, float, news, fundamental, volatility indicator. He's asking why. Why pick one? Is it one of those things? And lately I'm an expert in selecting the ones that go sideways all session. That was me 3 or 4 weeks ago. I was probably the top trader for the month of maybe, October, to pick every single stock that was just like this all day. And I focused on that one and got nowhere with it. But that said, it's always so. My A+, my setup's going to be different than yours, right? It's what I'm comfortable with. It's what I have confidence with. It's what I know works. So the best way to kind of think about it is, you're prepared tonight for tomorrow, for Monday. So as you prepare, you're either going to be right or wrong. So tomorrow morning, if something's gapping up and you're looking for the short trade and you were expecting it to go to X, then great, you have a good read on it. But the other ones that are not doing anything, they're off radar. Set price alerts so you don't lose them. A A lot of times we'll look back in 2 or 3 days and we shake our head because we missed like an amazing opportunity. But if you are looking to react off open, which a lot of times I am, and you have to know when that market is, right? Right now for me, once a week. Once a week, I'm really getting in there off open, 9:30 to 9:32, 9:33. The rest of the times, not so much. And so that for me is, I'm taking the step back until 9:45, 10 a.m. because when I get too involved off the open, then I start to miss all the other layups, right? I create, I make trading harder than it has to be because I'm trying to force or find the trade out of, the ones that I'm prepared for early. So for me, it's just I want to be proven right. And as long as it's coming into your wheelhouse, what you were expecting, then that's the one that I want to trade. And if you're wrong, you had an educated risk, so you stand by it. So that's really it. Make it as simple as you can. Trading is hard enough. Try to dim it down and make it as simple as possible. If you always wait for all of the stars to align, you're not going to really have any, choices. And if you screw that up, then you've already screwed up the 1 out of 100 that you kind of avoid anyway. So, or the 99 that you avoid to get that one perfect one. If you screw it up, you wasted a bunch of time. So trading isn't perfect. Your trading is never going to be perfect. So that's why I typically kind of scale into a couple different trades, start in it rather, and then scale into the ones that are working. If they're not working, that's fine. It's not big size and I can let them go against me, or I could just move on depending on what the market's doing. But the ones that are working, I will continue to scale in as they continue to prove me right. What do you prioritize more when you look for an A+ setup? Size of range and predictability of moves, size of range or predictability of moves. Kind of both, because I want high volume. I want to be able to size into that trade, and with the range, that allows me to take more of a reactive trade, get on the right side, get a padding, and then scale into the trade. So for me, my A+ includes both of those. And for you, maybe it's a failed follow-through setup. Maybe it's an ABCD type kind of breakout. But whatever your best trade is, just put those together and wait for that to kind of prove that you are right. Next one was, could you share a chart and thoughts of a recent good loser? Interested to see when levels proved you wrong, you cut and moved on. So what I would suggest is just go through any of the chat logs, and if there's any during the day that you have questions on, people ask me all the time. I'll just PM you the chart. And so, that's no problem at all. And typically I will tell you when something stops going in my direction and when I'm stopping out of a particular name. If something starts to firm up. And on thin names, as you guys know, I don't alert, in or outs or anything like that if it's something where it's easily crowdable. But all the time you see me stop out on things that are not working before they become a problem if I've scaled into the trade. One of the biggest things is what you'll see me do is after I've scaled into a trade, or after I've started into a trade, I typically say, if you are sized in, be cautious here. You probably want to move on. But if it's just a starter, then you're probably good to go. If it starts to go and it comes into my wheelhouse and I scale in at that point, I say I'm using real risk this time because now it's no longer a starter. Now I've scaled into the trade, and if I'm proven wrong at X level, that's the area that I'm moving on. So I would be looking for that kind of stuff. And if you have any questions throughout the day, just reach out. People PM me all the time. I always help them out. That's what I'm there for. John Doe, great name. When you were in development stage, what was your daily routine to become a consistently profitable trader? And how has your routine changed after becoming consistently profitable to still improve each day? One of the biggest things is just, prepare the same way each time. One of the hardest things that I have to do is really zone in 8 a.m. plus, and I want to be involved, for example, in my kids in the morning. But if it's too much involvement towards 9 a.m., then I'm all over the place by open. So I've noticed that I really need to zone in 8 a.m. plus. But get your walk in, get your head right, and if you find yourself kind of like itching to push the button, just hands off, right? And one of the things that I used to do, especially 2020, back with, the memes, AMC and GME and all that kind of stuff, I used to push the buttons a lot pre-market. I've become a much better trader just being patient until open. If I trade pre-market, I'm not going to size like crazy. I always leave room, or I always leave sizing until 930 plus now. I just want high liquidity. I don't want to deal with a pre-market trap that, rips into a circuit halt or anything like that. So that's one big change. But the other thing too is when I'm trading my best, I'm trading the least, right? And I'm focused on these things coming to me. I'm focused on getting off desk midday. I'm focused on just, I want to feel comfortable in the trade. I don't want to sit here and have to watch every single tick. And I used to do that. I used to be maybe oversized and maybe too aggressive and maybe too, not enough edge. And so you should feel comfortable on the trade. If you don't, adjust, whether that's sizing down, taking it off, reevaluating. There's no problem with getting out and getting right back in. Understand that. There's no problem with getting out and then getting right back in. It's better to reset, reevaluate, and pay that commission, which is cheap, compared to I was trying to make this thing work and now I just, lost, 30x, 50x what the commission would have been? Was it worth it? So I do that a lot. Sometimes I even test liquidity. Are they coming down and they're hitting me? And that gives me good information, or am I continually missing the cover? If I'm continually missing the cover, there's a good chance it's going to swipe up. Do I want to be sized in when it swipes up? No. Last one, how do you detect small cap market cycle shift as early as possible from weak to strong or vice versa? What type of confirmation do you need before changing your mindset? What things are you looking for, and how do you adapt and adjust your playbook? For me, it's just like, go back to MEGL, and that was the week before HKD, right? Everybody's doing the same thing. Everybody's hammering those IPOs. Everybody's hammering the China liquidation plays. Gave that warning, just didn't feel right. Everybody is getting rewarded for doing the same thing, right? We spent 3 or 4 weekends on Sunday Scan saying, hands off, not interested. Just because one of those trades that goes into a circuit halt could end your career. That's it. One circuit halt, into the next, into the next, into the next, and your career is done. And then recently after that, we had ILAG, right? So had I been aggressive, had I been as aggressive as some of these other ones and not respecting the fact that, hey, this thing was holding the support level that I gave, at that 420 level, could have been me, right? So understand when everybody is doing the same thing, you should be kind of hands off. Let that cycle play out, go back to it. And we've actually had 3, 4, 5 liquidation plays recently because everybody's kind of given up on them. They've come back. They've been some great opportunities. Not the same IPO style, but if you paid attention to what I said a couple weeks ago about the underwriters, then you've known that there've been some pretty good opportunities the last couple weeks. So same thing with, the fade all days. If that trade off open is easy, I'm not saying trading's easy. I'm saying if the trade is easy, meaning no headaches, went straight down, rewarded you for shorting, no matter what size, how aggressive, whatever, and it's flatlining. If there was no headache here and it's flatlining, for me, in this current cycle, I'd rather cover the majority and rescale if it starts to fade than be in there when it starts to rally back up. And that's another one of those things where right now, that cycle, doing that will help. And in my opinion, it's beneficial. So things like that. Just be aware of the noise and what everybody else is doing if you're trading small caps. If you're trading the big names and all that kind of stuff, you don't have to worry about it. And people always say, cut out the noise, cut out this, cut out that. But it's just like GBGI. GBGI is a perfect example. That one is a Discord pump. Last time it came all the way back in, and it's now back up to the prior level. But this time it just feels like it's crowded. A lot of people are doing the same thing. Now, I won't go long because it could offer at any moment, but just kind of understanding what the crowd is doing. This, if everybody's on the same side, everybody's hammering it short, you should be hands off. So that's it. Let's get into scan for tomorrow. All right, guys, so as always, I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're good with that and you want to understand what makes me look at a trade, what makes me take the trade, what is good risk versus reward, then you're in the right spot. So, again, if you have any interest, make sure you click through to the Cyber Monday deals. As I said, this is the only time we do these real sales with all these bonuses and all these things that we throw in. And if you've clicked through, you'll see all the extra specials that we've added this year to make it a no-brainer. Now, COSM, very nice. This was a big A-plus type setup. We had the huge gap up, huge overextension, started in, and then started to scale after it started to break down. Next day, gaps all the way back up. Fades off, but it collects. So we need to understand that 37s is a key level and 44 is a key level. And I think that a lot of people are going to be trying to do the same thing over the next couple days. We're either going to continue to grind and hold higher, or we're going to peak out at 44. We're going to start to fade. But you should assume that 37 is going to be tough. It's going to be support. If it starts to fail to follow through, that's when I will start to get patient. But as you'll see, you've got the layup A-plus trade, flushes out, comes all the way into the 25s after hours, after being about 60, 65 in the morning. That was a fantastic trade. Next day, gaps up, fades off again, layup. Same thing we were just talking about. Easy fade, flushes out. Guess what? If you didn't cover, grinds all the way back up. So just remember that when you don't have headaches, when it doesn't rally back, and make you kind of, get on the edge of your seat like, maybe I should have covered some. Guess what? Everybody's covering at those parts. Everybody's buying the breakout at those parts. If you make it through, as you saw, it flushed out another, basically 19 cents from that level. So anytime that it is easy, again, trading is not easy, but anytime the trade is easy in the sense that there wasn't a headache, you want to be proactive with covers. I always want to be covering before I think that I should have covered. And I'd rather, be upset that maybe I left some on the table because I can always rescale. And you can see that over here. It flushed out, came back, flushed out, and you had plenty of time. And then it just started to kind of grind off. But if you drew the lines we talked about in the room, which was 37 and 44, 44 came from the day before. You can see the resistance right over here. You can see it pre-market, this consolidation, and you can see pre-market on Friday. We had support at 37, which it pretty much held throughout the day. It doesn't have to be perfect. It's just that general area. Next is MANU. Higher the better. This one has headline risk. So, if somebody ends up taking it out, the family or whatever wants $7 billion. So everybody's kind of running it up. Whether or not they get that, who knows? Whether or not it gets anywhere, who knows? But somebody could pay it. People have a lot of billions out here. So if they want to own it, they can own it. And they know where they want to be number-wise. But great opportunity. It had a nice kind of parabolic move, and it flushed. And then it ended up holding VWAP. So I actually tried this area over here. And as I said, going back to the tweet question, I had said if it starts to firm up at VWAP, then I don't want to fight the trade. Now, I only had a starter, and there was no real reason to be nervous about it or anything like that because I hadn't scaled in. But, you can see the wicks get soaked up. Dip, soak, dip, soak. And so if VWAP does not break and it stays firm, I want to move on to that trade until we get that next kind of blowout, blow off. From all the adders. And so we ended up finally having that. You guys saw, if you're in the room anyway, you saw me scale into that trade. And I made it into the close. Really nice opportunity. But again, for me, since there's headline risk, I don't want to look for a full day kind of trade. I want to be purely reactive. I want to be watching for some sort of overextension that I can take care of or take advantage of, and then move on with the majority of it. So I might scale in for that move, flushes out, size back down, but I don't want to have, you know, a typical size that I would have on any other name, because we know that there's headline risk here. So, you know, if the trade works perfect, you're going to be upset that you didn't have enough. But if they get taken out, you're going to be happy that you did not go too aggressive. AMC, higher the better. This one's been a nice little trader. It always holds longer than you think. I do think we're at the tail end of this move potentially. And as we break down, I think 730s area will probably be the key area, and maybe we get down to 680s, 650s, something like that. So I'll be looking for the daily opportunity there. Got to move this back down. There we go. And then LTHM, this one, they had some headlines on batteries in China and this and that. So it got a lot of pressure. So I'm going to be looking for any morning moves on this one and LAC that start to fail 9:45, 10 a.m. So ideally it gaps up, comes in, retest, fails, and then I want to use that VWAP level as potential risk. Failed follow through potential, NWTN, it's been holding exceptionally well. This is one that can continue to go. It's something that you should just set a price alert. If you keep on trying to hammer it and covering, and trying to hammer it and covering, you're going to get, you know, tired. Let it do its thing. Set some price alerts where it's been holding prior support, and then as it starts to break down, you won't forget about it. You know, the other person that has been trying every single day that says, the hell with it, I'm done with it, will. Same thing with PKBO. PKBO has been another nice little, this one has a history of a big move. So when it starts to go, people, you know, go right back and think, hey, remember that time I had that huge move? So everybody gets excited, and very rarely does it do the same thing twice, but people get excited about it. So I'd be looking for a morning shove that fails. As long as it stays heavy, I'm interested. If it starts to kind of continue to hold trend, forget about it. JCSC, you guys should all know about this one. Nothing that you haven't seen before. Liquidation trade, we know the history. So anyway, they were walking it up. Huge gap up pre-market, and you know, reactive trade. I started in a little bit early, just small, just to kind of get in there, just in case one started to get heavy. But then most of my size was in this 115 range or so, started to scale into the trade, and locked along the way. So ideally, tomorrow morning, we have some sort of, you know, push back towards one again, and potential fade again. It's also possible they're front loading it and then they'll do some kind of PR. If they do that, we could have the squeeze out and then look for the fade. Make sure it agrees. You know, don't be fighting this thing, especially with the games that they like to play. PRVB, totally impressive. You know, the day that it had the news, I figured sell the news type day. It did. It flushed out. It was a fantastic trade. And then I figured that after it blew out the rest of the shorts over the next day or two, it would start to fade off. Instead, I think they just absorbed everything, and it's been really, really strong. So watch all pops. I kind of shifted my thought process to ideally a 10 to 12 kind of parabolic move, but we'll see what happens. I'd love to see some sort of exhaustion and double top here start to take formation. So 940s, 950s, set those price alerts. Once it starts to fail off those levels, I'm interested. Until then, let it blow off. Possible reactive trade. 9 is another one. I've got, these are the wicks we talk about. So anytime the wicks get soaked, what does that mean? That means longevity. So it's not something that you want to fight. You want to set a price alert. There's going to be a great trade. The day that it breaks that 820, 810 range, it's going to go 750s, 650s. So you're not going to miss the trade, but you will miss the trade if you continually get chopped up on these days. So it's been a good trader as long as you're expecting it, but it's not a high conviction trade until this 820 level or so starts to break. DBGI, like I said, this one, it's interesting. This was a pump this day over here, and then again recently, and this time it's holding on. It's a relatively small float. They'll raise any day. So if you go long, you're asking for it. Can it continue to go? Absolutely. But just know that if you do go long and they raise, you knew. And, it's all fun and games until they do that intraday offering or pre-market offering and you get smoked. But it was very trappy, very interesting kind of action where it was kind of ramping, then let sit back, comes back, sits back, goes up, sits back. That traps shorts because it keeps them in there, makes them excited. And it's not something that I want to fight the trend on. So be patient, let it do its thing. But heavily retail crowded, Discord pumped, but at the same time, I do feel like shorts maybe got a little aggressive, and so blow them out, and then we'll have a nice clean trade. Last but not least, the continuation section, MMAT, as I talked about last week, this one, it's got a catalyst now into December, I think 12th or something like that. So MMAT, MMTLP, be aware of that. I think it's setting up for a trade just as good as maybe that I think it was TCRH, one of the two, before they changed the symbol and all that good stuff. So it is setting up the same way. They do need money. They are ready to go. But I think they kind of wait for peak chasing from longs and covers before they do the next spinoff. MICT, just monitoring it. It's not something I will long, but it's been on scan for most of last week, continues to go. Note that the volume's less than 1 million most days. It's just starting to get over 1 million. So this can continue to go. People look at the move and they think this has gone too much, but I look at the volume a lot of times. And, it's something that you don't want to just jump in front of. YGMZ, this is a known liquidation trade. You'll notice that this had some crosses at 4 a.m., right? So they're doing something here. They got some kind of plan, and who knows? And they probably did this the last couple days. Maybe I just didn't see it. Yeah, you can see 4 a.m. this day, and then off the open this day. So, they're doing something. They're probably placing blocks of shares somewhere, and they're running a promotion, and they're going to run it up, maybe get some news. But this was actually one of the first of its kind. This was one of the first liquidation plays back in the day, if you guys remember. So I never forget these. Some people do. I don't. And it is coming back, and they are firming it up, and we'll see what happens. Not sure that I'd go long on it, but I will not take it off radar because if you've paid any attention the last couple weeks, CNEY, LGHL, SGLY, and a few others, TC, you got a lot of nice 50, 60, and 80% drops. And that's just from staying familiar. And that said, CHOP, same deal. You can kind of see they're starting the washing machine again. And this should look the same as LGHL, right? Where they just held it flat for a little while. They do their move, they dump it. They do their consolidation, they run it, they dump it, they consolidate it. So TOP is in that consolidation phase. Whether they start to run it or not, I don't know. But we know to watch it because it is one of those trades. So as they start to break it out, once they start to flip the shares, once there's a real seller, then I start to take note. Keep in mind, the reason why these IPOs stopped working is because everybody crowded them. Everybody started doing the same thing. Before they just dump, it was all just dump volume. Then, like ILAG and HKD and all those other ones, all the dump was short volume. That's why they went into circuit halts. That's why they ripped everybody apart. So last but not least was GGE. You guys should be familiar with this one. They did a deal over here, raise, and I think they were changing the whole course of business, but it's been a nice steady grind. Idea has been, watch dips for a big picture potential trade. Could be a nice little runner in the near term. But that's it. That's what I'm watching. Only a couple main radars for this week. And as usual, I'm going to be focused off the open, waiting for opportunity, waiting for things to come into my wheelhouse. And I definitely went to 40 minutes again, even though I was going to try to shorten it. Every time I say it, it never works. But again, if you have any interest at all in coming on board Investors Underground, now is the time. We did the Black Friday for annuals. If annuals were not for you, we do have the quarterlies and different specials like that. Make sure you check out the deal. because, like I said, this is the only time of the year that we do this deal. We will not do it again. And next year at this time, it'll probably be something different. But we have never offered this many bonuses with the deals and the specials that we do on this particular week long kind of event. So that is it. We'll see you in the room tomorrow, and have a good rest of the weekend.